Welcome to Clarus Wealth's first ever online lunch and learn presentation. I am Simon Roughsedge and a founding co-director of Clarus Wealth, a chartered financial planning firm with hubs in both Surrey and Somerset. We have been planning to do these lunch and learn sessions for ages, and I'm just delighted to get the ball rolling with this first one, which is 3 takeaways of investing in uncertain times. Throughout this year, we've got several other events planned, with the next one being in May, which is planning your retirement. And each seminar is designed to be no more than 30 minutes long and focusing on specific details or a specific subject. Particularly, as I said, in this session, we're looking at the 3 takeaways of investing in uncertain times. And I'm going to spoiler the whole thing by giving you those 3 things up front. So, number 1, look beyond the headlines. Number 2, manage your emotions. And number 3, focus on what you can control. Of course, this is a live, it's a public kind of presentation. So nothing in this should be considered personal advice. It's more for general information and educational purposes. It's also important that you know that we've switched off the live chat, but the question function is still fully operational, and the team back at the office are available for the next hour to answer your questions as and when they come in. After this event, we'll be sending out a follow-up email in which we will cover all the questions and post the answers to them as well, so that everyone's got access to the information that we can share. Clarus Wealth is part of a network, a UK-wide network called Best Practice IFA Group. It's a high-end, award-winning network with also chartered status. I'll make sure that this slide is back on at the end of the presentation, so you've got time to really go through it and read it with all the warnings, etc., about kind of risk and reward and information, etc. But without further ado, let's start moving on. So where are we now? I think it will be good to start and have a look at what's going on in the world now and where are we and what's happening. So obviously, we're being bombarded with information, and good information, about things that are happening in the world today. The situation in Ukraine is a horrific humanitarian crisis, and something that should not be taken lightly or held lightly. The outworking of it, it's difficult to describe. The outworking of it is broken families, broken property, devastated land, devastated economy, death, lost life, injuries are just horrific. And even in those kind of, it shows the worst of human beings, really, doesn't it? But even in the midst of that, there are some nuggets of gold of human involvement and human hearts coming together and pulling together to try and resolve or find solutions to help people that are coming out of that situation. The information and the outworking of that kind of information that you get on Ukraine is wide-reaching. It's a globally impacting event, and there's no way that any of us can escape that. Sure, we might be safe where we are in our homes and in our countries outside of Ukraine, but this is it's an impact. It's an event that's going to have a global impact on all of us, and I think we need to be aware of that. Look at inflation in the UK, for example. Look at the potential implications to productivity and food generation and food distribution, not to mention the impact of world growth. But all of this information needs to be taken on board and considered carefully. I think I read recently that, or I think scientists in 2017 basically try to measure the amount of data that we get in an average day, and how much information does our brain need to process. And they came up with a number, and they reckoned it's about 74 gigabytes of information a day that we get thrown at us or absorb and process. Now, if you're like me, that means nothing. I can't even picture what 74 gigabytes looks like. I've got no concept of that as a data package. So what I did is I tried to find out, put it into more useful form. And I think it's equivalent to around watching 16 movies in a day. And when you think of it like that, that number becomes staggering. And how we get that information is massive. We get it from the news we read, the radio that we listen to, audio books, books that we read, the newspaper, the computer we sit in front of. But also, what about our social circles? What about the things that we just see and pick up as we walk through our day? News is everywhere. Information is everywhere. I think in the 1970s, there was an article written that noted that the average person in the UK was exposed to about 500 daily adverts. This is more like 5,000 a day. That's a phenomenal number. So much information that's hitting us and so much data that we have to take on board. And of course, much of that information that we hear and we absorb is negative or it's very saddening. Just think about the news you've read today. In fact, think about the news that you've heard over the last 2 years or 4 years or 20 years or beyond. Credit crisis, pandemics, recessions, world poverty, rising inflation, wars. All the time we hear about these horror stories, these headline events. The recent events in the Ukraine show, as I said, the worst of the world, but also some glimmers of the gold in people's hearts. Nothing can take away from the cold fact that people have died and suffered terribly, and ultimately, the war has no winners, as Neville Chamberlain said. And one of the outworkings of the war in Ukraine is the rising inflation, which is impacting all of us. In the UK, the Consumer Price Index, or the CPI, was reported at being 7%. In America, that's 8.5%, and in Germany, it's 7.3%. These are figures and heights that we haven't seen for 40 years. And I'm not sure we're at the peak yet. Which kind of leads us on to our first takeaway. We need to look beyond the headlines that we get. We often read and absorb these pieces of information that can shape and shake our morals, raise our anxiety levels, or tempt us into making rash decisions. We need to see this information. Of course we do. We need to know what's going on around us. We need to be socially aware. We need to be mindful of the impact of our actions and the impact of others' actions on ourselves. But we need to learn to look beyond those headlines, the headline itself. And what I'm about to say is not to discount the suffering or the magnitude of some events, but it's to understand that often some of the headlines that we see are often bigger than the story. For example, I saw a headline this morning that I think it was in the New York Times that the World Bank slashes global growth forecasts. It's true, it has reduced global growth forecasts, but from something like 5% to 3.4% or something around about there. So we're still seeing global growth. But the headline that sells for the New York Times is the World Bank slashes global forecasts. Often, the headline is bigger than the story. There's a chap called Han Rosling. He co-authored a really excellent book called Factfulness, which I thoroughly recommend that you download or you buy and have a read through. It's a nice, easy book to grapple with and to kind of throw around some thoughts in your head. But in that, he explains that headlines are often there to sell something, but looking for other signs and remembering that while something in the here and now is bad, the world is generally improving. And I seem to remember him talking about an example like polio. He said, look, polio is in the world today. That is bad. But thanks to the brilliant brains that are around and the advances in technology, there's a lot less of that disease around in the world. The world still has bad elements, but it's still getting better. Therefore, as I said, we need to see this information. We really do. But we need to learn to look beyond the headline itself. This chart is by the really good folks at Timeline. And they've put it together to help us see, or rather, we've put it together to help us see what it looks like in that aspect of looking at information from both sides of the coin, looking beyond it, but also understanding it at the present time. But let me take a step back. When you sat down and you developed your financial plan, you probably made it with various timeframes in mind. So, for example, you probably had from now, you probably set objectives from now to 3 years, and then you probably did 5 to 10 years, and then you probably did 10 years plus, just getting to the horizon of what you can see and learn and understand. When you did these goals and these timeframes, you sat in your little bubble, generally thinking about you and your family and what you'd like to achieve. And then probably someone like me sat down and said, look, to achieve your plan, you'll need to be disciplined, you'll need to have objectivity, and you'll need to be educated along the way. And more importantly, you'll need someone with you at your side to hold your hand when the going gets tough. And we know from our own lives, and we know from the news, that the going is going to get tough. And history tells us that it will happen again. We know that. It's got to happen again. It can't always be plain sailing. This chart shows a history of those significant tough time events. It shows you the downsides, but it also shows you what happened after that event. Where you see the grey lines, they are all the tough time events. And in there we've got political decisions, we've got recessions, we've got wars, we've got company failures, we've got market crashes, we've got credit crunches. The whole shebang is in there. And then the purple shows you what happened as a subsequent event of each of those tough time events. Each number given in there shows you the potential upside, or not the potential, the actual upside that happened in that time, and the actual downside that happened in those tough time events. Now, obviously, I can't guarantee what's going to happen tomorrow. I just don't know. But what we can see here is that history has shown us that generally good times follow after a tough time event. Even during conflicts, as we recently reported, markets tend to do okay. Therefore, what we need to do is we need to consider each event and each headline through the lens of our own investment perspectives and remain committed to our own plans, our own objectives. For example, if I go back again a step further and I look at the events in Ukraine and the impact that has had on, say, inflation, let's look at beyond that. There are so many positive signs. We have seen inflation rising, 7% in the UK, 8.5% in the US, and 7.3% in Germany, just to name three. But even within that, there are positive signs. For example, there are signs that consumer demand, which was the original driver for inflation increasing in the first place, is starting to slow down. A leading US consumer sentiment index was better than we expected, and companies' intentions to employ people seems to be high. These are good news stories, but we don't hear about them because they're not selling papers or they're not selling news articles. It's important that we look beyond that piece of information. Of course, as always, we need to rely on others for short-term insights. And much of the next period of time, the next few weeks, the next half of 2022 and beyond, will depend a lot on what China and Russia do. Yes, of course, there are whispers of recession on the horizon, but there's also the possibility of a really strong second half rebound. Of course, I don't know, but these are the uncertainties that we have to wrestle with. For example, if there is a peaceful solution that presents itself to the situation with the war in Ukraine, then energy prices could probably fall. And if China changes its tack or reverses some of their COVID restrictions, we may see a good productivity revival for goods. So essentially, things can remain uncertain. That's what we're in the world of. There are people. We all take decisions and base our decisions on information. But it's more likely that we're just going to muddle through the rest of this year. And this chart shows you that muddling through doesn't always mean poor returns or a large impact to your financial plan. Which takes us to takeaway number 2, which is manage your emotions. I sat here or stood here and told you to look beyond the headlines. But your emotions are probably struggling to allow you to do this. Emotions are wonderful. They're something that allows you to show an intense passion for something, or equally against something, or a person, or a thing. There's an American professor of philosophy. His name's Dallas Willard. And he has a lovely phrase: feelings are good servants, but disastrous masters. Remember, I was talking about your plan that you created, sitting in your bubble, focused on you and your family and your goals and your objectives and your timeframes. You would have sat there making those plans and those timeframes without any elation, without any nervousness, without any fear, just with a plain and simple plan of what you are trying to achieve. We get this information in, we see this information, we look at the headlines, and all of a sudden we can become ecstatic about it. Think about England football team when the World Cup arrives. We get caught up in a wave of exciting headlines. Think about the news that's coming out now about inflation, about the World Bank slashing its global growth forecast, about Ukraine's situation. There's nervousness, there's fear. All of these things create emotions for us. This is a similar chart to what I showed you earlier. But what I'm trying to show you is that managing your emotions, looking beyond the headlines, sticking to your plan and maintaining your discipline through that time frame is likely to end up with a better investment journey than if you panicked. We're never going to avoid dips. We're never going to avoid the scary moments in any investment journey, in any financial plan. Even if you're in cash, the risk of inflation is still there. There are still risks. There are still dips. Maintaining your discipline, maintaining and controlling your emotions for the future is good, and it is vital for achieving your goals. We often get bombarded with information that tells us this is the new hot potato. Go down here and you'll double your returns. Do this and we'll save taxes. But in our experience, hopping and dilly-dallying, chasing fads actually probably adds to your emotional burden that you will end up placing on yourself. And you're probably highly unlikely to outthink the market. And you could actually end up incurring more risk in the process completely unknowingly. There's a piece of analysis by a company called JP Morgan, which I'm sure you're all familiar with, which looks at a time period between the 4th of January 1999 and the 31st of December 2018. And what they look at is three things. They look at what happens if you miss the 10 of the best days out of those 7,301 days, and what happens if you missed 60 days of that time period. If you miss those 10 days of market growth between that time frame, your annualized return would have fallen from 5.62% to 2.01%. That's cost you 3.61% in the process of just missing those 10 days. Even worse, if you'd have been out for 2 months, 60 days, because of your emotions or because of nervousness or fear, you'd have actually seen a negative return over that time of 7.4%. The analysis is really interesting in another aspect too. It looks at it identifies that there are 6 of the best performing days happen within 2 weeks of the worst day. It's amazing. Who would know that? Who would time that? How would you figure out when to go in and when to come out? It's a great piece of research. But it leads us to number 3. And number 3 is how to control your what to focus on. Focus on what you can control. Most of us have very little control over our world events or world events in general. And most of us have very little control on what the headlines have. to say. But we all have control over our responses and our resulting decisions and our resulting actions. You can control your objectives. Given what you know today, are your objectives still relevant, important, and are they ordered correctly? You've just received all of this information, 74 gigabytes of data, 16 movies worth of information that you've taken on board today. You've considered your emotions. You've gone through the point that they are good servants, but terrible, terrible masters. And you've looked strategically at your objectives and your timeframes. Are they still correct? Are they still good? You can control those decisions. You're looking at it now from a perspective of clear-mindedness, objectivity. Once you've decided whether they're right or need tweaking, you can then look at your investment parameters. Your investments don't have to have the same risk category. They can all have different risk categories depending on your timeframes. That's what you are there to. That's what your advisor's there to talk you through with. But are you investing correctly for your objectives? Are they globally diverse? Different parts of the world grow at different rates. They also fall at different rates. And it's very difficult to tell which part of the global economy will grow and which part won't on any given year. Are they cost effective? There are two things that are sure. We all know that: taxes and deaths. Are they cost effective? As the tax implications on your investments correctly allocated? Are you investing across different countries, different currencies, different companies, different asset classes? These are things that you can look at and you can control. Sometimes, of course, plans have to change. We have to reconsider our objectives. And sometimes that's when a life event forces us to make a change. Thinking that through critically at a point of clarity can help. What happens if I get critically injured tomorrow? What would my finances look like? How does my financial plan change if something like that were to happen to me? How would it impact my family? If you can spend the time critically thinking that through and planning it and modeling it in an event where you've got clarity and at a time where your emotions aren't going to be stressed, then when and if that event happens, you've got an idea of what you need to do to plan for it or to put into place for it. There should be things in place that can help recover your situation through that process. Of course, sometimes the best action is to do nothing. It's just to sit and ride it out. If you decide that your objectives are consistent and unchanged, stay the course. Stay disciplined. Talk to your advisor. That's what you pay them for. That's what we're here for. They lend an element of education, objectivity to you, and discipline. Maintain the course. I hope that this 23 minutes has been useful. I've really enjoyed putting it together. I've really enjoyed going through the idea, the presentation of it. But the truth is, uncertainty is always going to be with us. It might just be different uncertainty today than it was yesterday. But we need to know that information, but we need to have the tools to look through and beyond those headlines, to manage our emotional reaction to it, and then look at the things that we can control rather than the things we can't. Remember, our emotions are terrible servants. Sorry, they're great servants and terrible masters. Focusing on the things that we can control is really important. These are three really strong points when anything is uncertain to just bear in mind, to refocus, to review your objectives. I really want to thank you for spending the 24 minutes now just of your lunch break with us on our Lunch and Learn session. We're really keen to hear if you've got any suggestions or you'd like to hear us present on something. So please just send us your suggestions. It would be lovely to hear from you. Of course, we've got our questions are open, so please fire them over to the team and we'll respond to you. The presentation will go out again on our email afterwards. And otherwise, it's just been a pleasure to be here and present to you. The next one will be in May, and it will be on planning for retirement. Many, many thanks for your time and take care.